So in this video, I want to talk about this earnings trade that I like to place that I consider is not gambling. A lot of people say that earnings is always a gamble. It's always 50-50 no matter what. But I think with this trade that I'm going to explain right now, I think that it's not a gamble. It's not a 50-50. So Ulta Beauty was announcing earnings May 28th after hours. So the trade I made is when Ulta was trading at around 245 on Thursday, May 28th. I made this following option strategy. So I did a put spread, a put credit spread. I sold the 210 put option and I bought the 205 put option expiring June 26th. So on May 28th, when Ulta was trading at 245 before earnings was announced, I sold a put credit spread 210, 205 strikes. I collected 99 cents for that trade. So the way I win with this trade is if come June 26th expiry, Ulta is trading anywhere above 210, I'll keep the 99 cents. So I did one contract. Since one contract represents 100 shares, so 99 cents times 100 is $99. So I actually collected $99 from this trade, but I could have done more than one contract. But given my account size and the risk that I want to take, I do only one contract. So I collected 99 cents and I keep it as long as on June 26th, Ulta is trading above 210, anywhere above 210. So if we look at what happened to Ulta after earnings, so after hours, this is actually right here after 4 o'clock. This is after hours. Ulta dropped a little bit. It dropped to 235, 234 after hours. But then the next day it opened at 238, dropped to 236, and then came back up again to 242. So remember, I keep the premium collected as long as it stays above 210 come June 26th. Now the other way I can take advantage of this trade is I don't have to wait till June 26th. As long as the premiums drop in value as time goes by, I can close the trade early and get out of the trade before June 26th. So the idea with earnings is premiums are overstated before earnings, and right after earnings they come down. There's a volatility crush right after earnings. So that's what I want to take advantage of. So as long as Ulta is trading at the same price or higher, I can basically close the trade early the next day without even having to wait until June 26th. Now I'm not going to keep the full premium, but I'll make a decent percentage of the premium collected. So when Ulta opened on Friday, the day after earnings, it was trading at around 242, 243, 245, but I wasn't able to close the trade for a profit. So there wasn't enough volatility crush and Ulta didn't move at all. But then today, June 1st, Ulta was trading between 245 and 250. So I was actually able to close the trade for 50 cents. So remember, I sold it for 99 cents and I closed it 2 days later for 50 cents. So making 50% of my premium collected in exactly 2 days. I didn't have to wait till the full June 26th expiration. So my profit is a difference. 99 cents minus 50 cents, that's my profit, times the number of contracts that I sold. Here's why I consider it not a gamble, because look at all the different scenarios I have where I could still win on this trade. So remember, before earnings, Ulta was trading at around 245. After earnings, what could it do? It could either go up, it could stay put, it could drop. So now if I had just bought the stock at 245, the only way I would win is if the stock goes up. So in that case, it's considered a gamble because I basically have a 50-50 chance of winning. Either the stock goes up or it goes down. So with the put credit spread, I win if the stock goes up, if the stock stays at 245, and even if the stock drops a little bit, it has room to drop. It could drop between 245 and 210 and I still win. Not only that, but it could drop below 210. It doesn't matter. So it can even drop below 210. As long as it comes back up above 210 come June 26th, I've got time for this trade to go against me and still become a winner. So how is that 50-50? Look at all the different winning scenarios. It could go up, it could stay put, it could drop a little bit, it could even drop a lot. But because I've got time on the trade can still become a winner. So really I have to look at the probability of Ulta opening from 245 to below 205 and staying there for the next 30 days. So I think that probability is not 50-50. It's much smaller. So that's why I think that trading earnings this way, by doing a 30-day out of the money put credit spread, is not necessarily gambling. I think there are more scenarios that make this trade a winner. Therefore, I don't consider it a gamble or 50-50. And as you can see from this trade that I didn't even have to wait till June 26th for this trade to be a winner. As time goes by, if Alta is trading at the same level or even goes higher, I can close the trade early for a profit. So that's just an even extra scenario where this trade becomes a winner. So as you can see, Alta May 28th was trading at this range, and today it's still trading in the same range, a little bit higher, and I was able to get out of the trade. So it doesn't take much for this trade to become a winner. So the way I place this trade on Questrade, this put credit spread, I simply look up the option that I want to trade. So in this case, for example, Alta, and then I'll pick 30 days. So I'll look at the expiration that has 30 days or closest to 30 days. So let's say July 2nd in this case. And then I'll look at the straddle, look at the value of the at the money straddle. So if Alta is trading at 239, so the closest thing is 240. So I can see that Alta has an expected move for the next 30 days. It has an expected move of about 30 points. So what I'll do is my put spread will start off at 30 points lower than the current market price. So if Alta's at 240 right now, then I'm going to sell my put spread at 210 strike. Over here, I'll just choose 210. And the long strike, I like to do 5-point wide, but that's your choice. So 5-point wide, so my max loss is $5 minus the credit that I receive for selling this. And as you can see, July 2nd, 210-205 put credit spread on Alta would give me quite a decent credit actually. Somewhere in between, probably around $1, $1.50 I can collect from this trade. And the way I would win is if Alta stays above 210 come July 2nd. So actually this could be a new trade that I can make outside of earnings. So I simply put the price that I want, let's say $2. So that means if I'm doing one contract, I'd collect $200. I could change the number of contracts here if I want. I could do 2, 3, 4, 5 contracts, whatever I want, as long as my account size permits. So I put in my price again here, over here, and I simply just click send order and confirm. All right, so let me know what you think about this. If you consider earnings a gamble based on the way I trade it, let me know in the comment section below. And like always, if you're going to open an account with Questrade to trade on the stock market, use one of my referral codes in the description below to get up to $250 back depending on your deposit. And the other one gives you $50 in free trades regardless of your deposit. And if you enjoyed this video, please click the like button, share with a friend, and subscribe to the channel. Thanks for watching.